Warren Buffett can almost certainly predict that cryptocurrencies in general will have a poor outcome. Blockchain is significant and it's clever, but Bitcoin has no special value at all. Nothing is produced by it, it's a fantasy. This is just a glimpse of what Warren Buffett thinks about Bitcoin. So let's go into detail about the thoughts of the man himself with regards to investing in Bitcoin. Welcome to Three Towers Investing Channel, bringing you the latest in finance, investment, and innovation. American business tycoon, philanthropist, and long-term investor Warren Buffett served as the chairman and CEO of Berkshire Hathaway. He is commended as one of the most prosperous investors in the world and is worth more than $100 billion. Buffett was born in Nebraska's Omaha. He gained interest in business and investing at a young age, and throughout his career, the stock market produced truly amazing returns. So what does this billionaire have to say about the infamous Bitcoin that everyone's been gushing about and how they're all earning huge profits easily? In recent years, Bitcoin has slowly gained acceptance from the traditional finance and investment community, and Warren Buffett has maintained his skepticism about cryptocurrency. During the Berkshire Hathaway annual shareholders meeting, he claimed that the asset is not productive and produces nothing measurable. Buffett would still not purchase Bitcoin despite a change in the public's opinion of it.
Well, I shouldn't answer any questions on the subject, but I will. There's all kinds of people watching this that are long Bitcoin, and there's nobody that's short, and nobody wants their windpipe stepped on. I don't blame them. I don't like people who step on my windpipe. But I would say this, that if the people in this room owned all of the farmland in the United States, and you offered me a 1% interest in it, and you said, for a 1% interest in all the farmland in the United States, pay our group, let's see, 10 trillion, pay us this bargain price, $25 billion. I'll write you a check this afternoon, $25 billion, now I own 1% of the farmland. If you tell me you own 1% of the apartment houses in the United States, and you offer me a 1% interest, so I'll have a 1% interest in all the apartment houses in the country, and you want whatever it may be for it, then call it another $25 billion or something. I'll write you a check. It's very simple. Now, if you told me you owned all of the Bitcoin in the world and you offered it to me for $25, I wouldn't take it, because what would I do with it? I have to sell it back to you one way or another. I mean, maybe I have the same people, but it isn't going to do anything. The apartments are going to produce rental, and the farms are going to produce food. And if I've got all the Bitcoin, I'm back where whatever his name was, who may or may not have existed, was 15 years ago. If I've got it all, he could create a mystery about it. But everybody knows what I'm like. I mean, so if I'm trying to get rid of it, people will say, well, why should I buy some Bitcoin from you? I mean, why don't you call it Buffett coin? Make your own or something. What? Do something. But I'm not going to give you anything for it. And you'd be right, incidentally. But that explains the difference between productive assets and something that depends on the next guy paying you more than the last guy got. Now, net.
Even Bitcoin enthusiasts often view the cryptocurrency as a passive investment that buyers hold on to in the hopes that its value will rise over time. Buffett said that nobody is shorting Bitcoin and that everyone is a long-term investor. Some coins give more experienced cryptocurrency investors a way to use their holdings productively, whether through lending or using them as collateral to boost their portfolios. They are still relatively new, very speculative, and haven't become widely accepted like Bitcoin though. Buffett explained why he doesn't think Bitcoin has value by contrasting it to items that produce other kinds of value. Buffett said, "I'll write you a check this afternoon if you said for a 1% interest in all the United States farmland, pay our group $25 billion. I now own 1% of the farmland for $25 billion. It's very straightforward. If you give me 1% of all apartment buildings nationwide and another $25 billion, I'll write you a check. Now if you told me you owned every Bitcoin in existence and offered to sell it to me for 25, I wouldn't accept it because I wouldn't know what to do with it. In any case, I'd have to sell it back to you. It won't accomplish anything. The farms will produce food and the apartments will generate rent." Because of Bitcoin's potential to perform a variety of tasks, investors have struggled to determine its worth for years. It has a solid reputation as an investment asset in Western markets, especially in the last year, with rising interest rates and inflation. There is still a lot of room for its use as digital currency in other markets. Assets must provide someone with something in order to be valuable. Additionally, only one type of currency is recognized. You can think of anything, and we can display Berkshire coins. He held up a $20 bill and said, "But in the end, this is money. And there is absolutely no reason in the world for the US government to accept Berkshire money in place of their own." In the past, both Buffett and Charlie Munger have criticized Bitcoin. Munger reiterated Buffett's famous remark that Bitcoin is probably rat poison squared. Bitcoin does all three of those things, according to Munger. "In my life, I try and avoid things that are stupid, evil, and make me look bad in comparison to somebody else. First of all, it's stupid because it'll probably still end up at zero because it threatens the Federal Reserve System. It is evil. Thirdly, it makes us appear foolish in the eyes of China's communist leader. He had the foresight to outlaw Bitcoin in China." But why is Warren Buffett isn't a fan of Bitcoin? Buffett's crypto criticism starts with the fundamentals. He said, assets, in order to have value, must deliver something to someone. A slightly different viewpoint would be, an asset has value if someone is willing to pay for it. Even though financial markets frequently treat these ideas as if they are the same, they are not. As University College London economist Mariana Mazzucato explains in her book The Value of Everything, early economists made the distinction between actual value creation, where new socially useful resources were created, and value extraction, where money changed hands, but nothing was produced. The economic theory evolved over time to become more subjective, willing to give consumers the final say on what value meant to them. And as a result, treating market demand as a gauge of value when viewed through this prism. Buffett's position makes perfect sense. Since Bitcoin has no productive value, unlike a farm or an apartment, two examples he used for comparison, it has no value. Even though Buffett is the most well-known value investor in the world, Mazzucato points out that Buffett does not exclusively invest in ethical, socially responsible businesses. When it first began, value investing was more similar to what distressed assets are today. When investor Benjamin Graham discovered that some companies were worth less than the total of their parts, the field of finance was born. You could purchase them, take them apart, sell each component separately, and profit. Buffett's brand of value investing entails purchasing dependable, well-run businesses. But even if this approach has a complex relationship with social value. According to Buffett, he prefers to invest in businesses that have moats or some sort of barrier to competition. Up to a point, and depending on where the moat is located, that is acceptable. Tesla CEO Elon Musk, the richest man in the world, has countered that, saying you like moats is just a nice way to say you like oligopolies. According to Musk, technological innovation is the only type of strategic advantage that is good for a company. Buffett has consistently missed out on this kind of useful, tangible value creation. He acknowledged that until 2011, he was unable to appreciate the potential of Google and Amazon. And in the end, that's the case with cryptocurrency, that it's not just speculative money, but rather a fundamental technological advance that will eventually open up new fruitful use cases that even a seasoned investor like Buffett can't even imagine. Now that was quite a lot to expound. Of course, we all know that older generation prefers the long-term, slow and stable process of things. Meanwhile, the younger generation is now discovering and welcoming easier and smarter alternatives to earn more money. Now, I'm not saying that either of the two is wrong about how to use their money. It's just that these generations are simply doing things the way that they discovered them to be effective. And this is the end of our video. If you think this video was helpful, show us your support with a like, subscribe, and don't forget to ring the bell icon to stay informed of the latest videos. Thank you for watching. This is your 3 Towers Investing channel.